a pleasure to have you join us on another episode of the program. I am Okpayemi Owoshi. We start off with business news. The Central Bank of Nigeria has clarified the tier-based classification of bureau de change operators, stating that the new guidelines followed an early exposure draft circulated for public input earlier this year, which the bank has now incorporated and posted on its website on May 22. According to the Acting Director of the Corporate Communications Department, Akama Sidi Ali, who spoke with reporters in Abuja on Thursday, the new guidelines include 2 tiers of licensing. She reiterated the bank's invitation to interested parties to apply for BDC licenses, provided they meet the new guidelines, effective from June 4, 2024, while existing BDCs will have a 6-month grace period to meet the new requirement. Furthermore, Sidi Ali said the CBN remained committed to repositioning the BDC subsector to play its envisioned role in the foreign exchange market in Nigeria. The Lagos State government has announced that the state attracted over 50 billion naira in investment through foreign direct investment and domestic direct investment in the past year. This inflow of capital was revealed by the Commissioner for Commerce, Cooperatives, Trade and Investment, Folashade Ambrose Medembem, during the ongoing ministerial press briefing marking the first year of Governor Babajide Sanwo-Olu's second term in Alausa Ikeja. Additionally, she said the state is committed to the Themes Plus development agenda, focusing on formulating policies, executing infrastructure projects, and designing trade expansion programs to accelerate economic development in the state.
To achieving the mandate of the ministry as enshrined in the Themes Plus development agenda. We understand that many of our efforts will materialize over time as their impact cannot be felt immediately. But we are extremely committed to ensuring that no stone is left unturned to create a conducive environment that will continue to attract and retain investment and ensure that businesses thrive in the state. We also participated on a panel section on Africa infrastructural investment and returns. And clearly, when you start to think about Lagos State and the fact that we're a city of more than 23 million people, infrastructure is really at the core of our development. And it was really important that we participated there, particularly given that there was a $30 billion fund set aside by the United States. And it was very, very important that we made sure our investment opportunities were highly stated and the readiness for business and openness for new investments was adequately communicated. And we also had a number of investors and stakeholders visit our stand. We had an Invest in Lagos stand, which was the busiest, I'm happy to say, across that event that day. We had so many people that were visiting our stand, and we answered a lot of questions and really tried to make sure we laid the groundwork for further impactful collaboration and conversations. Now, investment promotion has another facet to it, which is about investment facilitation. And again, a number of current stakeholders and investors doing business in Lagos, it's important that we ensure they retain, i.e. they continue to do business in Lagos State. So part of our mandate as well, by way of driving economic prosperity and growth, is to engage accordingly. So we worked and engaged with the Lang and Grant Modular Factory, who established a new state-of-the-art line to ensure that they started to build and manufacture roofing tools and equipment. And they spent, I think, in excess of over $5 million, which is about 7 billion naira. And obviously, the ROI on that is going to be in excess. So when we translate that, that obviously means there's going to be a lot more jobs and exemplifies the potential of the private sector and the fact that in addition to what we do, we also support climate-friendly and sustainable development opportunities. And in recent times, investors have not only expressed interest to continue to do business, but I'm also happy to say that we also have a number of people who are actually putting down a lot of capex and money with regards to the investments that they want to place in Lagos State. And here, recently when we attended a stakeholder visit to the Lekki Worldwide International Zone, which I'll come to later on in the presentation, but I wanted to mention as a highlight that Realcom Corporation pledged a capex investment injection of over $5 billion in the proposed Lekki Airport project, and obviously also to do with the steel manufacturing. And so again, that just gives you a highlight. And this occurred during our 2-day working tour to the Lekki and Lagos Free Zone in February earlier in the year. And a memorandum was signed with Messrs. Ficon Capital Limited, its Italian partners, who are establishing a steel plant that will provide over 200 direct jobs across 700 hectares of land in the zone of the Lekki Free Zone. So I just recap again. That was Fincon Capital Limited, who are going to inject a significant amount of capital in order to establish a steel plant that will provide over 200 jobs on 700 hectares of land in Lagos State.
We'll go on a short break and be back with more news in the corporate world. Welcome back. Nigeria Securities and Exchange Commission has approved for International Breweries PLC to raise funds by ways of rights issue. This means that the company will sell the agreed number of shares amounting to 588 billion naira to only existing shareholders. International Breweries PLC will offer to shareholders the proposed rights issue of 161,172,395 naira to 100 ordinary shares of 2 kobo each at 3 naira 65 kobo per share on the basis of 6 new ordinary shares for every one existing ordinary share held. The qualification date for the rights issue is May 2nd, 2024. The application list opened on May 21st and will close on June 10th as approved by the Commission. The Central Bank of Nigeria says mobile money operators, including fintech firms like Opay, PalmPay, Kuda Bank and MoneyPoint, will resume the enrollment of new customers in another couple of months. CBN Governor Layemi Cardoso disclosed it at the 295th Monetary Policy Committee meeting of the Apex Bank in Abuja. Cardoso said to block money laundering and illicit flows, the Apex Bank brought up remedial measures that will help the sector to tighten up on onboarding and even existing clientele base.
The fintechs have definitely not been singled out for any exceptional kind of treatment. They have not. So, and I've read a couple of things in the press more recently, and I want to assure you that that is furthest from the truth. It's furthest from the truth. On the contrary, we are very proud, and I know all of us in this room must be, of what the fintechs over the years have been able to do for the country and the positive impact that it's having, not just in the country, but worldwide, globally. So it is for us to support them and help them to strengthen what they've already been able to accomplish. So that is furthest from the truth. However, regulation is very, very critical in a sector that seems to have grown so incredibly rapidly. More recently, we had spoken about that in the past, we had cause to take a deep dive look at the whole issue of illicit flows and money laundering, particularly within the more heavily regulated banking system. And we all know some of the issues that came out with crypto and some of the messages that we put out after that, which of course gave us some cause to know that there was need for heightened surveillance, Bring out remedial measures that will help that sector to tighten up on onboarding and even existing clientele base. And I'm confident that as time goes on, and hopefully in another couple of months, I would say, all this will be something of the past, and then we will see that sector going back into what they've been known to do before, but certainly with a very, very stronger regulatory framework.
We'll go on a short break, but coming up next on the program, managing investment risks amid Nigeria's rising inflation. Details of this after this break. Welcome back. According to the National Bureau of Statistics, the headline inflation rate rose to 33.69% in April 2024, marking a significant increase from the previous year. Food inflation in particular has reached an alarming 40.53%, driven by soaring prices of essential commodities like millet flour, garri, bread, and yams. Nigerians are grappling with a high cost of living, compounded by recent government policies such as the removal of petrol subsidies and the unification of forex windows. As a result, the naira has depreciated sharply, further straining households' budgets and investment portfolios. In this challenging economic climate, effective risk management and investment is more crucial than ever. With the CBN raising the monetary policy rate to 26.25%, the investment landscape in Nigeria has become even more challenging.
The MPC, however, noted that the inflationary pressure continues to be driven largely by food inflation. The committee thus reiterated several challenges confronting the effective moderation of food inflation, to include rising costs of transportation of farm produce, infrastructure-related constraints along the line of distribution network, security challenges in some food-producing areas, and exchange rate pass-through to domestic prices for imported food items. The MPC urged that more be done to address the security of farming communities to guarantee improved food production in these areas. Members further observed the recent volatility in the foreign exchange market, attributing this to seasonal demand, a reflection of the interplay between demand and supply in a freely functioning market system. The committee also noted the marginal increase in the external reserve balance between March and April 2024 and urged the bank to sustain its focus on accretion to reserves.
To help us navigate these turbulent times, I'm being joined by investment professional Kingsley Aigbe. Thank you for joining me on the program, Mr. Aigbe. Now, can you explain the recent trends in inflation and their impact on the economy and investments?
Thank you, and it's a pleasure to be on this program. Like you rightly said, inflation has been on the rise over the last 12 months, and the major factors that have been responsible for the spike in inflation, a couple of, national policies, which includes, the removal of petroleum subsidies, as well as, the central bank decision, to float the currency. Those two major impacts have seen inflation, like you said, skyrocket to about 33+%, and food inflation is even worse. It's in its 40s, and food inflation particularly has been fueled by, insecurity in the northern part of Nigeria, which is where most of the food stuff, come through to other parts of the country, and people haven't been able to go to the farm, so there have been supply disruptions with food. There's also the exchange rate pass-through effect. What I mean by that is there's the imported inflation. So some of the food components, we're seeing the rising prices given the rapid depreciation of some of the local currency affects food prices. So notwithstanding, we are at a point, in this year where we think that yes, the central bank has been quite hawkish in trying to tame inflation. And if the primary objective or mandate of any central bank is to maintain price stability. The central bank has tried its best to ensure that, it tries to keep inflation, in check. But given the nature and the type of this inflation we're seeing, which is largely cost-push-driven inflation. The tools available to the central bank are quite limited. The central bank is also pursuing an objective whereby they're trying to stabilize the currency, which of course again, ties into inflation. And we've seen, all manner of policies trying to manage the exchange rate, because we all understand and we all know how critical that effect of not having a stable currency, the effect it has on the level of prices in the country. And that has seen, the currency move from, about 740 naira to a dollar, to almost twice that now. It's at 1.5. What the central bank has been trying to do on the exchange rate front is to make, interest rates, pretty decent, whereby, investors in Nigerian, fixed income instruments can earn, real returns. So what I mean by that is, if you have inflation at 33% and yields on short-term instruments like treasury bills are way less, then it means, the investor returns are negative. So what central banks try to do is to narrow that gap and if possible, try and make, the spread positive. What that in turn does, it attracts inflows from portfolio investors, which we call FPIs, and that comes into the economy, and that sort of provides, the additional, FX requirements which is needed, to run the economy. We require at least almost $300 million monthly in terms of our import bill. Oil prices have been stable and rising, so that has helped. But in terms of oil production volume, that has also improved, but we're not anywhere close to our OPEC quota, right? So with all these things put together, we know that, the job of, being the central bank governor hasn't been easy, right? So these are the trends we're seeing.
The depreciation of the naira and the removal of petrol subsidies have added further strain. How do these factors impact investors' decisions and market conditions?
Great. So it's no longer news that petrol subsidies have been gone, although they've also done a good job in maintaining the price. Because a lot of people have argued that we removed the subsidy a year ago, the exchange rate was 750 naira to a dollar. Now it's almost twice that, but we're still paying, the same thing. So there's some sort of input subsidy, which is probably required at this time in the economy to minimize the shocks and disruptions. So for investors, the key word here is to be cautious. Yes, you still need to keep on investing, but you need to be aware that, inflation is really on the high side. Prices are rising. You need to be looking at instruments where, that can provide a reasonable hedge over inflation. The way it's looking, money markets or other fixed income securities, given the negative real returns, may not provide, the required hedge against inflation. Equities would have been ideal, but again, you have to be very selective and look at the right sectors that would provide, that hedge. People might want to look at alternative investments, which are, products that are not, your traditional investment products, which could be, tracking commodities like gold, or even, agricultural products, which in this type of scenarios could provide, some decent buffer and hedge against inflation. Right? But overall, investors would approach this period at this time with cautious optimism.
What are some effective ways investors can diversify their portfolios to mitigate risks during these turbulent times?
So diversification of portfolios is very key to any investor, and even particularly in these turbulent times, right? So yes, you still need to diversify across asset classes, which would be equities, fixed income, alternatives, commodities, and the rest. But particularly in this type of period, investors should look at those sectors that we think would provide exceptional returns. For example, if you look at agriculture, we all know there are supply constraints in that sector. So anybody going into agriculture, with a decent model, we all have to feed, maybe making a very good bet at the moment. There are also new trends in technology and fintech. We in this part of the world and in most parts of the world, people are making a very conscious effort in digitizing their economy. And therefore that has created, you know, significant opportunities in that space. There's also healthcare. They say a healthy nation is a wealthy nation. So people are keen into those products, right? But overall, I will still maintain that investors should always remain cautious. And when they are taking risk, they can also consider geographical diversification. So you sort of calm down the naira exposure and look at other currencies just to provide that sort of comfort and cushion against possible losses that we'll probably expect to see as the year winds down.
Now, Mr. Igbe, you agree with me that there are so many sectors that people can invest in. But then I would like to know that do you think there are any particular sector or asset classes that you believe will be more resilient or potentially lucrative in this economic environment?
People still make money. One has to be cautiously optimistic and selective in its approach. Commodities will be a good asset class, especially those that we think can provide a decent hedge against inflation, like gold, and some agricultural commodities. So there are ways you can directly or indirectly track those commodities by investing in them. So that's one asset class. Two would be selective equities in those sectors that that over time have proved to be sort of a good inflation hedge. So that's particularly financial services. And we can also look at geographical diversification where you try and invest in long generating naira assets just to provide some currency hedge to your diversified portfolio.
Now, given the present economic challenges, what advice would you give to someone who is just starting to invest?
Well, you start small. Don't put all your eggs in one basket. You need to understand whatever you're investing in. If you can't explain it to yourself, then maybe it's not the right product. You don't gamble, right? Take moderate risk, right? Educate yourself, ask all the right questions, consult your advisors from financial to tax to legal advisors. And also, plan for the rainy day. You need to be alive to invest.
Well, just before I let you go, what are your predictions for the investment market in the coming months, considering the high inflation and interest rate?
Okay, so inflation will continue to remain high for the rest of the year, albeit we don't expect to see significant spikes going forward. I think we've taken the hit already. However, there are some downside risks, given the ongoing talks with Labour and the federal government on increasing the minimum wage. If that pulls through, then we could see another round of inflation where numbers could get north of 40 and even 50%. So what that means is investing in short-term money market instruments might not necessarily provide the needed hedge investors will be looking to hedge against inflation. So what investors need to do is be very cautious, watch and see, and could insist on diversifying their portfolio as much as possibly that they can, both across asset classes as well as geographically. Typical assets would be very good equities, commodities, and some other alternative investments. Sectors that we know will do well with technology. We can't get that wrong. And to a lesser extent, healthcare and maybe financial services.
Investment professional Kingsley Aigbe, many thanks for lending your thoughts on the program. Well, that's it on this episode of the program. Many thanks for joining us. I am Okpeyemi Owoshi. See you next time.